Hey, good everybody, still here. Daily Market Pulse. This is Wednesday, July 9th. We saw stocks bouncing after, at what appeared to be a support area. It also coincided with the Fed minutes, so everything was kind of waiting for that. There was a fairly good thrust coming off of that news. Market distribution days right now, 5 and 4, S&P, Nasdaq respectively. We're under pressure as a result of having such a high number thus far, below the 8 moving average as well. Markets are probably actually starting to get back toward and above the 8 moving average at this point, but I'm just going to leave it as under for now. Dow Jones sees a little bit of a bounce. Everything's still trending higher for the time being. The Dow Jones still looking for higher levels if they can manage so. There is the S&P right at the 8 moving average, a little bit of a bounce, decent move there again as well as I mentioned. We did see, I'm just noticing now, which I did not, you can't really tell sometimes, there's a divergence right here, just to see how that's declining where prices are still rising. Prices are rising, you have a divergence that's telling you that prices could come down. I do say could. So anyway, everything's holding at the 20, still room to 2,000. I think that'll be key. If they ever get up there, that may be where things get uglier potentially. There's a drop on the Nasdaq, much more aggressive, back toward a pivot area that's dating back to March. That held the 20-day moving average as well. Decent bounce, holding still below the 8 moving average as well. There's a window directly above 44.50, which will be your target and resistance for the time being. We're still looking for 4,500 once again and possibly higher. TSX, after that lower shadow yesterday, mentioned that was probably a very good sign on the bulls. The buyers were still present. They still need to get up and through 15,200 and some other change. So there's still a higher level. Let's see, that's the high of 256.36 and 246. So it still needs to get over 256, almost to 260 ideally. 15,260 to get back up even higher than that. But that's a good pattern nonetheless. U.S. dollar, Canadian dollar, based on the Fed minutes and the fact that there was a little bit of rally, it actually reversed lower. So a little bit of a bounce as we saw earlier with bullish piercing, but not really convincing with resistance at 107. That's kind of what happened. It got rejected yesterday and further again today. It doesn't mean it can't go higher. It just means it's not quite ready as of yet. The Euro US actually did go, it bounced off the moving averages and went back toward the 50 and the 200, and that has a shot. Treasuries did take a swipe at 137. There's a top trend line in red right there that's based on the peaks. We'll see if that has any effect whatsoever, if that's real or not. But it's wedged pretty tight here with some downside pressure. Aggressively moving into 137. They got very quiet today with a little bit of volatility. 137 is the target. It's still there. It hit 137 literally on the button today as a high. 136 below. Below that as deep as 134 potentially. 135 for sure on the downside. The yen is after coming off its lows and the moving averages, finished near the right at the open, but not at the session high, but it's still close. So it still looks bullish. Still has a shot toward 99, I believe. Gold getting a little more aggressive. You don't see it here, but there's a green candle that comes all the way up to near 1335. Silver wasn't quite as aggressive today. A little bit of sideways, slightly higher, but not much. Not like gold, but it is better. Crude. There it is. Crude. That's yesterday's candle. Hang on. Crude dropped all the way, there it is. It was a big drop all the way back down to 102. So 102, I believe, will be a current support area. We'll see what it does at that level starting tonight and tomorrow. Small cap after the big flush held the 116 level, which was a pretty key level from before, and it still remains that way. Below the 20, but above the 50, and it right at a pivot area, including some other coincidences there as well. And then the VIX, it dropped a little bit back toward the window, and it looks like, if anything, if markets can remain somewhat bullish overall, then you'll see this drop back toward 11, I would imagine.